The East Abbotsford detached market has shifted. New listings have nearly doubled and sales are barely keeping up. In today's video, I'm going to walk you through the latest statistics for your East Abbotsford detached market. Watch till the very end because I'm going to share key findings that I found out in February by attending the Economic Outlook and a Housing Forum here in Abbotsford. Let's dive in. Let's start here at the East Abbotsford detached market sales to active ratio. In February, the East Abbotsford detached market represented a balanced market with a sales to active ratio of 15.7%. This was down from the 17% that we saw in January and down from the seller's market of 30.6% in December. The biggest thing that I was shocked by the latest stats was the number of new listings, and this is expected because we're headed into the spring market. In February, we saw 59 new listings, and this was up from the 39 that we saw in January and the 20 we saw in December. But where it gets interesting, folks, is sales haven't been keeping up. We saw 17 sales in February. That was up from the 15 in January. And if you look at these stats right here, these are one of the lowest sales that we've had in East Abbotsford since February of 2023. So the good news is we are seeing a lot more inventory of new listings hitting the market, but the number of sales haven't been keeping up. Last year, the average number of sales that we saw across the East Abbey detached market was anywhere between 25 to 30 sales for the detached market per month. Next, let's move on to months of inventory. Months of inventory sits at 4. That means 1 out of 4 homes listed are selling and 3 out of 4 homes are not selling. This is up from the 3 months of inventory that we saw in January. Right now, the average sale price for a detached home in East Abbotsford sits at $1,186,000. Days on market is 7, and this is down from the 41 that we saw in January. What this means, folks, is if you have a home that's priced at market value, the presentation of the home in person shows well, but the online marketing is also very creative and is top notch. That means you're going to have a higher number of showings for your home. That increases the chances of your home selling. The active listings right now for detached homes in East Abbey sits at 108. That's up from the 86 that we saw in January. If I was a homeowner here in East Abbotsford and I was thinking about listing my home this spring, I wouldn't worry too much about months of inventory, and here's the reason why. The East Abbotsford detached market remains highly desirable, and it is recording the highest number of sales in comparison to other areas of Abbotsford. I do expect the number of sales to increase as we head into the spring market. Now let's compare these stats to the latest Abbotsford detached market. The Abbotsford detached market is sitting at a buyer's market with a sales to active ratio of 10%. Months of inventory sits at 6.3. That means 1 out of 6 homes are selling and 5 out of 6 are not selling. There was a total of 32 sales in February. And if you go back to East Abbotsford, which I believe was 17 sales, that's nearly close to 50% of the total sales that are happening or occurring in East Abbotsford. And that's slightly up from the 29 sales we saw in January. The number of new listings sits at 126, and that's up from the 116 that we saw in January. The active number of listings sits at 319, and that's up from the 284 that we saw in January. Days on market is 14, and that's down from the 33 that we saw in January. So this is good news when you're looking at the East Abbey detached market and the general Abbey detached market. The average sale price for a detached home here in Abbotsford is $1.1 million, and that's down from the number that we saw in January. I wouldn't pay too much attention to these numbers again, folks, and here's the main reason why. The value of your home in Augustin, the McMillan area, or the Sandy Hill area is going to be different from homes across Abbotsford, and your home might be worth slightly more in comparison to other homes because you've done renovations, or the living space is larger, or you have a suite. Remember, beginning of the video, I told you I would share my key findings regarding the Canadian and BC economy, and these stats are from a forum that I attended in February. The name of the forum was called the Economic Outlook and Housing Forum. It was hosted by the Abbotsford Chamber, and one of the main reasons that I I attended this forum was because key developers were attending this, and some of the developers present at this forum that were speaking included Heinrich Constructions and the Algra Bros. So first, let's talk about one of the keynote speakers that gave their economic outlook for the federal economy. So the keynote speaker at this economic summit was Pierre Slorix. He's a research and chief economist at BDC. They deal with financing for businesses. What he mentioned was the federal economy in Canada will be shaped by three things. The first thing is the CUSMA renewal talks. As we know, the CUSMA trade agreement is up for renewal later this year. I believe it's in September. And what he mentioned was if he could get that out of the way, cleared, that would help increase production for businesses. It would give an uplift to the Canadian economy. The second thing he talked about is lower interest rates. At the last Bank of Canada announcement, we saw Bank of Canada holding their key interest rate at 2.25%. And what we can expect is Bank of Canada not to cut any rates further. So this gives a little bit more clarity to buyers that are first-time home buyers or people that are looking to upgrade. And these are people that were sitting on the sidelines waiting just to see what would happen with interest rates. Well, they're on the clock now. Interest rates aren't coming down, so we're going to see a lot more buyers getting off the fence and getting to the market, and this also impacts people that were looking to upgrade. We are going to see more activity from those folks that want to upgrade from a townhome to a detached market. And the third thing that he said would impact the Canadian economy is immigration. Immigration has gone down. I want to give you some stats to our BC economy, folks. Here in BC, we're in a recession, and the main reason is we're run by an idiotic socialist government led by people that aren't business friendly or they have no idea of what they're doing. The monkey's out of the bag, we're in a recession, and they can mask these stats all they want. So according to this economist, he said, the GDP growth for BC is expected to be around 1%, which isn't much. And the main overall growth for the BC economy would come from consumer spending. Other things that will give an uplift to the economy is government investments. Yes, that BC NDP is running a deficit. They're spending more and more money. That's because they're not business friendly. And there are businesses and corporations that want to come to BC, but when they're trying to open a business or trying to do business here, they're met by a lot of red tape. And what happens is that money flees to another province like Alberta, which is rolling out the red carpet for folks like these. In return, this has a negative impact on things like employment and the overall benefit of our provincial economy. So in a nutshell, BC's growth will be driven by lower interest rates, government investments. The government that creates their own problems are the ones trying to solve it. The one key thing that I found interesting at this conference was commercial construction and industrial construction is outpacing residential construction, and we're going to see a lot more investments in this area. And what they mentioned is where there is opportunity is in commercial real estate and these businesses that are looking to implement AI. Near the end of this event, one of the things that they did was they brought these developers on stage to talk about some of the pitfalls or challenges that they're facing in their business. And it all came down to that the main challenges they face when it comes to building homes and getting construction out there is the heavy wait time when it comes to getting permits and the cost they are paying for each unit to all levels of government here at the municipal and at the provincial level. Other things that they mentioned was there is a housing shortage. Also, another thing that they've said is cost of construction has doubled in nearly the last 5 years. And what this means, folks, is when the developer has to pay more in permits, fees, building material, that cost is forwarded to the end user, which is the buyer. Another interesting thing that they discussed was when these developers are doing a pre-sale, 25 to 35% of the overall buyer is investors. That market is dead. Investors aren't buying right now, but what they are seeing is people that are first-time home buyers, people that are downsizing to a condo or a townhome. I'm not going to mention which developer, but one of the developers mentioned that they are going to be waiting on the sidelines just to wait and see what's going to happen with our provincial and federal economy. Other interesting things that the developers talked about are they're going to start focusing on certain niches, which include first-time home buyers or people that are downsizing. In a nutshell, what they said is, in a couple of years, we will see a shortfall of homes on the market that will be exceeded by demand. My personal prediction for the East Abbotsford detached spring market is we're going to see an increase in the number of sales, and maybe we could see that average sales increase from 15, 17 to anywhere between 25 to 30 sales per month. Is that going to increase the overall sale price of your home? Not likely. Drop a comment below and let me know what you think is going to happen in your East Abbotsford detached market. If you found today's content valuable, please go ahead and hit the like button and subscribe button. I'm Gary Dhindsa, and I'll see you next week.